What's good, guys? It's been a while, but I'm finally back, and it feels good to be back. A lot of people have been asking me to create live trades and tutorials, and so I decided to go with tutorials since my trading session has changed. I trade now from 8 p.m. to 8 a.m., uh, and so it's not necessarily ideal to be recording for 12 hours out of my trading session, not knowing if I'm even going to take a trade or not. And so I think I'll just stick for tutorials for now. With that being said, a lot of people have been messaging me about break of structure and identifying the trend, and that is the tutorial lesson that we'll be going over today. It's called break of structure, BOS, and it's identifying the trend. So let's get to it. It's very important to trade with the trend. The trend is your friend. That's the saying. Whenever you're in a bullish market, you create higher highs and higher lows. And whenever you're in a bearish market, you create lower highs and lower lows. That is very important to understand. Now, bullish market is when it goes up, if you didn't know, and bearish is when it goes down. So, let's cover it up a little bit. So in a bullish market, you create higher highs and higher lows. And to identify what trend you're in, whenever you break above a higher high, you see what happened was here. I gotta show you. We had a higher high right here. Then we created a higher low, and then we created a new higher high. So whenever you create a new high, that is considered break of structure and knowing that you're in a bullish market. And as you can see, when going up into this higher high, we did not break below this higher low. So this remained untouched. Now the same thing here. This higher high was this higher high created this higher high created a new higher high. We broke above it. We formed a new higher high. So when you have a new higher high, you're still in a bullish market. And once again, the higher low remained untouched. And so you're still going up. It's a bullish market. So I believe that a break of structure is much better than trend lines. I don't necessarily believe in trend lines because with break of structures, you can also possibly catch a move during consolidation. And I will go through that later on in the video. Just thinking if I missed anything. I don't think I did. So now shifting over to a bearish market, you have a higher high, but we never broke above it. We never had a break of structure, and we never created a new higher high. Instead, we created a lower high. And this is a higher low. Why? Because this low is higher than this low. This is a higher high because this high is higher than this high. However, this is a lower high because this high is lower than this high. Now, as you can see, we didn't break above the lower high, and we broke above the higher. We broke below the higher low. This is now a break of structure, and now you're shifting into a bearish market. Bearish market is when it goes down. You created a lower low because this low is lower than this low, and we never broke above this high, and so we continue the trend. Now, when you're trading, when you're trying to make money, the objective is to catch the trades down here and sell up here. Catch the trade down here and sell up here. Vice versa, you catch the trade at the top here when you're shorting the market and getting out here, shorting here, and getting out here. That's the ideal entries and exits. Now, what do you do when you create a lower low and then you create a higher high? You would technically have to wait when you create a new low to know necessarily what's going on, because sometimes this could cause manipulation from the banks. So as you can see, we have a lower low because this low is lower than this low, but we also created a higher high because this high is higher than this high. So in this situation, what do? You wait to see if you can create a higher low and go up as a higher high, or if it continues going down. Because like I said, sometimes it's a manipulation from the bank, so it's better to usually wait off on a situation like this. Now, if we're going into a real market, it's first of all, it's much easier to identify higher highs, higher lows, lower highs, and lower lows when it's drawn like this. Because when you go on candles, it looks a lot more chaotic with the wicks and everything that's really going on. So if we're looking at, let's say, this market right here, as you can see, if we start from, let's start from the left here. As you can see here, we're creating, first of all, a way to practice is by doing two things. One, you look at the highs and lows of the market and you just draw it out to see if it gets broken, like that. Or another way is by going over to TradingView, click on this T here, and now you can just continuously, write higher high, lower low, higher high, and you just write it all along here. As you can see, both ways work. It's good to train your eyes because, like I said, it's much more difficult to identify the trend with candlesticks than it is by drawing with lines. So it's very important to put in the time and effort into training your eyes and being able to identify this, like what do they call it, like nature. So yeah. Another situation here we have is here we have a higher high. Around here we have a higher high. Here we create a higher low. However, here we created a higher low because this low is higher than this low. And so, like I said, this is like one of those manipulation kind of things I mentioned where it creates a lower low and a higher high. So it's better off to wait because you create a higher low, but you also created a lower high, but you also created a higher low. So it's better off to wait on this kind of stuff. Over here, you have another lower high because this high is lower than this one. Here you also have a higher low because this low is higher than this low, and so on and so forth. Over here, this is why I consider what people consider consolidation or chop, where there is no exact movement or exact direction in the trend. It's just going sideways. So we tend to not trade during this, and we like to trade when it's like this, because as you can see, there's a clear trend. There's a perfect trend actually. You go here, you have this is a higher low because higher low, yeah, higher low because this low is higher than this one. Let me zoom in a bit. Yeah, this low is higher than this low. You have a higher low again here. Higher low or higher. No, you have a lower high because this high is higher than this one, so this one's lower. Here you have a higher high because this high is higher than this one. Here you have another higher low. This low is higher than this one. And I personally like to take it of like the average. Like I know some people, they would consider like this one a higher low because this low is higher than this, but I like to take the average. So I would consider this one a higher low as compared to this. These two compared. I wouldn't necessarily consider this one. I would consider this one and this one. And once again, we're respecting the trend. Higher high, because this high is higher than this high here. higher low because this low is higher than this one here. And as you can see, we're breaking all of these structures. Another one here, 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 here. And as you can see, this is manipulation. You created a lower low, and at the same time, you created a higher high. So this is like when banks come into play. This is at 5:30. So I believe this was CPI, which is a red folder news, where heavily affects the market. And yeah, that's basically it. Like your goal is to catch these higher lows with a PD array, which is like gaps, inverse, supply and demand, whatever, order blocks. And yeah, your job is to catch these lower lows and higher highs. So pretty easy. Make sure to trade with the trend, because the trend is your friend. And yeah, make sure you just mark out the higher highs and higher lows and get your eyes trained. That's it for this video. Pretty simple video. If you're confused anywhere, you can slow the video down and rewatch it. Let me know if you have any questions in the comments, and I'll get to you. See you in the next one.